Okay, what's happening, everybody? Jay here, smarthelping.com. We got a real busy week. Let's talk about the agenda real quick. So, we're going to finish this property management financial model. We're going to do a joint venture waterfall with a GP catch-up. I've never modeled that, I've heard about it. It could be interesting. We're going to do a quote versus actual database tracker and dashboard for construction jobs. I think that's it. Let me check my notes if I have anything else. Oh, and possibly to the car wash model, adding a membership revenue stream instead of just one-time drive-throughs. So, lots of stuff going on. We're going to try and finish this by the end of the year, all these items, but I don't know. We'll see. We might stream every single day this week. Before I get started, remember this template I'm building here for the property management business can be found. It's going to be actually included on the SaaS bundle, the real estate bundle, obviously, and the startup financial models bundle. So it fits in a bunch of different categories. Remember, you can buy all the templates on the whole entire site for $9.99, and that includes anything I ever build in the future as well. Just ask for a refresh, and I'll send you over the latest zip. Usually I focus on SaaS and PaaS or recurring revenue businesses, a lot of real estate underwriting tools, and then just general startup models for a bunch of different industries. Then I have a lot of just high level joint venture waterfalls that are good for any business. It just depends if you're structuring a joint venture, accounting tools and trackers, HR tools. Oh, by the way, on Friday I did do the project management template. That was updated. That's a pretty good one. Where you can track the progress of or plan out when you're going to do different tasks over the same timeline, and it's got complete versus incomplete color coding, and it is pretty good if you want to see if you're trying to manage a team that's doing or multiple teams that are doing things within a 24-hour span or within, you can look at a daily, weekly, monthly view. And so it's pretty helpful for a lot of situations. Also, this is good for like accounting, CPA firm, or a law firm where you've got a client that has a bunch of different things that need to get done over time, and you want to see when you plan on starting each thing and when the deadline is, and you can see that visually and then mark off when things are done, and it'll give you a nice visual. All right, so let's do our quick sound checks and this over to Twitter. Quick sound checks and this over to Thank Twitter. Goodness it's working. Good. Live financial modeling, prop management biz, part 5 today. Okay. So we got through all of the revenue logic the last couple weeks. Today is going to be more focused on getting a lot of other schedules around it. So it has a lot of nice reports, some internal rate of return calculations, some more cash flow items, potential for debt, CapEx. We'll get all the 3-statement modeling logic in here. So lots of stuff going on today. Let me just get this live here so I could see on my phone. Sorry I've missed. I saw I had a couple messages the other day, and I just rarely see them because they're so far and few between. So sorry if I didn't respond to you in the chat. I've got my phone up now, so I should be able to see any messages that come through. All right. So before I do anything else, I want to do some conditional formatting on this. So property management business, you can the main way people usually charge for revenue is a percentage of rents under management, but you might also charge a flat monthly fee or a flat fee per unit. And again, the units are different than the actual customers, your property management customers, which would be like landlords, and then these would be the units that are under management. So these are mutually exclusive. You have to pick one. So either you're going to charge your property management fee based on revenues, a flat fee, a per unit fee, and you can actually do two different customer types, and they are independent. But let's just put some formatting. So based on the one you choose here, I want the relevant um, row to highlight and the other ones to gray out. So what we do here, let's see, conditional formatting. We have to do a formula. And for this, we simply say, I want to do if C, or if D17 equals percentage of rent, then I need to format C19 and 20 with a, and let's see, what do we want? We'll do like a light green maybe, if it's the one that's supposed to be picked. And let me manage rules. Okay, it applies to, this should only apply to C19 and 20. Conditional formatting is a lot easier in Google Sheets. Let's lock this. I think we need to lock this. There we go. Okay, so it's good. So that's good. Now I just want to duplicate this. And then for this one, I want to say apply to row C19 only. And if this equals, what was the term? Is it just flat monthly fee? No, see this, see this is frustrating. Flat monthly fee. See, this just got erased. So let me undo. Manage rules. This should only apply to, this has to lock. And this just applies to these two. Okay. So now we have to do a completely separate formula. So go back in, click this, make sure I know the term flat monthly fee. Okay, it's the same. So we're going to say if this equals flat monthly fee, then I want to make it light green. Okay. Now, perfect. So you can see how it's switching back and forth depending on which one's used. And now per unit fee is the last one. So we do that here. If this equals per unit fee, then I want to format light green. And let me see. Okay, good. All right. So this gives you a nice, you can really see what this means if you just start changing it, and these are mutually exclusive. Now what I want to also do is if we also want to say if this does not equal this, then these should be like grayed out. So here, now we say new rule, if D17 equals per unit fee, then just give me a gray with darker gray. Okay, let me see what this looks like now. So that's perfect. Okay, and then I want to duplicate that rule, but say do the same thing if it says per unit fee, because those are the two options where that would not be selected. Okay, so if I do percentage of rents, it's that. This, oh, flat monthly fee is supposed to be grayed out. Manage rules. Did I forget to change it? Flat monthly fee. Okay, there we go. So we're grayed out, unless it says that one. Perfect. And then for this one, we say we could duplicate this rule twice, and then we want to say if it says percentage of rents, whoop, then we want this light gray. Okay. And then this one is per unit fee. Just some user functionality here while I'm filling energy to do it. All right. Let's see if I did that right. So per unit fee is grayed out. Percentage of rent. Oh, nope, didn't do it right. What did we mess up? We did percentage of rent. No S. Okay. Shows up there. Not there. Good, good. Okay. So now we do per unit fee, and then we're done with this. And I'm going to try and just copy and paste this down to the same section below, and hopefully it just duplicates all the formatting. So here on this one, if percentage of rent is chosen, then format there. And then, what's the other one? Per unit. No, flat monthly fee. Okay. Now, all right, that looks good. Good. Oh wait, flat. Why is this blank? Per unit. Good. All right, let's fix one thing here. This needs to have font a little bit darker. Okay, great. Now, let's pray and copy this down. Copy, paste. Does this work? No, it does not. Oh, dang it. Is it, hopefully is it updating what's up there? No. I was hoping that would drag down. All right, let's look at this. So manage rules. Oh, we just need to change from D17 to D54. And I don't know if I could do a find and replace within a conditional formatting setting. Wait, it's not letting me. Hold on. Let's see if we can just go replace D17 with. Okay, what's going on with my scroll bar is not working. Why can't I highlight anything? I don't know. D54. Okay. Nope, no match. Let's see. Let me go back here. Okay, so I can drag this. For some reason, this is not letting me select in here. I don't know why. That's really frustrating. Let me try this. All we need to do is change this D17 to a 54 and we're good to go. Well, let me edit these. Yes, so these are editable. Why is this not? It can be deleted. I can type, but it won't let me edit what's there. Oh, I've never seen this. This is really annoying. Oh wait, the apply to is wrong as well. Hold on, wait, let me see. Apply to 56.7. So that apply is fine. This should be to 59. Oh wait, yeah, that's fine. Oh, these are right. 61. All right, I can't even copy this to paste it. Frustrating. Okay, well, dang it. What I can do is let's go to manage rules. I guess we'll just copy this. Copy. Delete. Change it to 50. Oh wait, it still won't let me. Okay. Dang it. We're just gonna have to clear it all. Clear the rules. Redo it. New rule equals 54. If that if 54 equals percentage of rent. Okay. This one. New rule. This equals flat monthly fee. Give me a green. Okay. Good. And this one. This equals conditional formatting in Excel has always been a little touchy. All right, so we should be good now. There, there, okay, and then these two manage rules. So we duplicate this twice, and we say if it duplicate, and we say if it equals. Oh, it's not letting. It's still not letting me. Okay, whatever. If this equals flat monthly fee, give me a gray. Okay, and percentage of rent's correct. And then if this one, got to delete the whole thing and redo it. I don't know why. This equals per unit fee. Give me a gray. All right. So flat, green, there, perfect. Next one. Now we're done with this. All right, new rule. If this equals percentage of rent, give me a gray. I did not think this would take this long to do. Um, okay, but I did want to do it today in this stream. If this equals, what am I even doing? Flat monthly fee, I think, if I'm on the last one. Fill. All right. So, oh, this is wrong. What happened? If it's per unit fee, oh, dang it. Per unit fee. All right, so there, those two are great. Per unit fee. Oh, no. What the heck did we do here? Ah, so we didn't do anything for this one yet. So if it says percentage of rent, grade up. Okay, and also if it says flat monthly fee, all right. Well, now you can see how difficult that was to do. But it all works now. So that's cool. We did the customer goal where you can put in the percentage of your goal that you want to get for new property management customers or your property management company getting new customers. You can put your goal here, the percentage of that goal achieved over 12 months in each year, and that will define how many new customers you're adding your clients. If you don't care about these two rows and you just want to put in your total clients added per month like this over the 16-month period, that's fine too, and you can just hard code in this row, and that will go through all the logic for how we're calculating all of this revenue for customers of type 1 and customers of type 2 and the main revenue for property management as well as the other revenue items. We also have variable costs here based on that activity. So I really like how the template turned out for all the logic assumptions. I think this is very good at creating a nice financial forecast for property management. We're accounting for anything you could think of in for a high level look at any property management company. These hit on all the bases for how revenue is made and the variable cost related to that. Okay, so now that the conditional formatting is done, um, we have the monthly detail. I now want to go into getting all the other ancillary tabs. So we got a lot of tabs we got to add in here. Whoop, put this over here. Lots of tabs. Lots of tabs. And let's start labeling. So we're going to put in financial statements. So income statement monthly, income statement annual, balance sheet monthly, balance sheet annual, cash flow statement monthly, cash flow statement annual. We don't have any inventory to worry about. Um, Not really any complex logic. We'll just do a standard CapEx schedule. We will add options for debt funding for any of the startup costs. And then we'll also have, so we'll have a cap table, which I'm going to show you. The cap table, I'm now defaulting to a little bit of a simpler style. So it's just kind of, if you want to adjust it manually, it can, but it'll also just be automated as an overflow for the minimum equity needed. Um, I'll show you how uh, that's going to happen here in a second. CapEx, debt schedule, terminal value. We also need executive summary, and then our discounted cash flow analysis will be under distributions 1. Now these two will go over here. Like this. We want these at the front. Most important is revenue, variable cost, fixed costs. Then you'll have cap table, CapEx, debt schedule, terminal value. All right, I don't think I forgot anything. We might need an annual detail tab in here just for the references when I go to do the find and replace. So let's just put that in as a placeholder. Everything else should be good. So let's get a template for all this 3-statement modeling. And I believe we just need a 5-year, pretty simple. Let's see, which one do we want to do? We could take, no, the sports agency, was this a 5-year or 10-year? Let's see, I can't remember. We built the sports agency one as the most recent. Oh, it is a 10-year. Okay, what about construction? That's definitely a 10-year. But let's check. Yep, need a 5-year template. Golf course. This one, I believe, is 5. Yes. All right. We should be able to bring in all of this. Let's see. Startup. Oh, startup costs we forgot. Let's put that in here. Cap table, terminal value, all of this is fine. Okay, this looks great. We can definitely use this. And then I just want to check on the tax calc. Let me see on this real quick. Okay, we're gonna update that because that's being spread over the year, and I'm gonna put it only for the year of exit for the tax calc on that. Other than that, this is fine. Okay, so let's bring this over. Now, I believe the global control should still be pretty set. Let's see, just numbers are changing there, right? Okay. That's fine. 5-year. Well, we can do this after we import the rest of it. The point is, the monthly detail is still running off of this. Let me make sure. Wait. We should be stopping. C6. Oh, did we not put in stops? I don't think we did. All right, that's fine then. So we need to put in so that this stops at the end defined end month. Okay, that's fine though. Okay, so everything else should be in the right spot. Let's import the rest of this thing. Startup costs. And then we'll do some formatting. Debt schedule. This would be just like if you're doing a regular like SBA loan or something. Depreciable capital assets. Now this is the one we'll do an interesting or a little adjustment on the default of how it displays. Not changing any of the logic. And terminal value. Okay, did we get everything? I think so. Now, income statement. Oh, let's get this. Annual basis. Now, if we do this right, it should be a pretty quick integration because all this logic exists. We just do our find and replace, format it, and voila, we have three statement modeling connected to all of the logic we already built for the bottom up, all those assumptions we built the last couple of weeks in this property management model. And let's get this. Okay, cash flow statement. And honestly, the cash flow statement is kind of like, well, cash flow statement and balance sheet are like formal levels of your uses and sources, where it shows how everything's balancing out and what money's going where and all that. All right, executive summary. And just kind of cash flow analysis. Now, actually, so this executive summary doesn't have the bottom section. So don't save this. Let's pull, we can pull it from here. I believe it should be fine. We may have to redo the formulas, but that's okay. Normally on these I'll have like this little part here. All right, that's everything that we need to import. Now we have to make it all work, which is going to take some time. So we want to format first. Let's get one tab at a time. So this needs to be a drop-down dynamic based on the date selected for launch year. Okay, that works. This is yes, no, that's fine. That's fine, that's fine. We'll call this properties LLC. Oh, we need to do our find and replace. So now, so we have all this logic in here, but it's connected to the other workbook. So we need to go find and replace, And anything that says this string has to be removed from every single formula that we just put in. So we go in there, replace that with nothing, and we go all workbook, and we replace all. And we failed. Well, how far did we get? So that means something is being referenced that is, nope. How far do we even get to here? So we got to here. It looks like the capex. Right here. Construction and land. All right. So we have to undo. Let's go back to the capex. So construction and land tab we need. And that will not actually have this. Actually, shoot, how are we going to do this? So the golf course actually was a little bit different. I'm going to pull from a different model then for this part. I'm going to look at the e-commerce. That should be our standard style. Yes, okay. This should work fine. Yes. Okay, let's try again. I'm hoping, now there might be some other stuff. Let's just try it. Okay, no. So where else do we have? Probably more references to that. Where's our reference error? Here, yep, construction and land. Okay, so shoot. Dang it. Well, this happens. So this was a bad template to use for a template because it had a unique thing for construction and land, which is not normal for, it was too specific for that model to use. So maybe we just use the e-commerce one. I believe it should be fine. Yep, I think this is good. All right, here we go again. Sorry, guys. Really apologize. I should be apologizing to myself. So we go global control. Um, oh, I need to add an inventory tab on here just for a placeholder until we do the find and replace. All right. So with that, let's do the cap table. And I can't just I have to do essentially one big swoop, so it all has to be from the same source template. This cap table, capex. Trust me, this is faster than trying to just use the other template and then have to manually go in and see all the places that need to be changed because our property management company is not going to have that specific logic for like whole and land construction that a golf course has. So everything has to be from the other template. Okay, startup cost. This actually is fine. No references. So we got all of this. Let's do the income statement now. These are the most. Now I've done these manually changing all the three statement modeling logic, and it is way more difficult than just recopying and pasting this stuff in, so this is fine. All right. Balance sheet. Annual. Let me make sure there wasn't any extra rows on the bottom of these other ones. To do this right, you really have to make sure all the positioning is the same. It's really an art form. All right, now we go replace. We want to find everything that says this. Copy. And you'll note why the tabs need to have multiple with a space, so it makes sense when you do the import. Thank goodness that worked. Okay, so 13,000. Oh, we actually need to do the executive summary. This is a nicer one anyway. Copy this. And the distributions as well. All right. And we could do that find and replace again here. That's all good. Okay. I believe we're good. We don't need this. So there, that. Startup costs fine. Looking good. Now we're going to have to format all this and then do the references. And we're going to try and do as much of that today as we can. So now we have to give this data validation. So we had to repaste it in. Okay, so we can select there. Yes, no. This is fine. Okay. We don't need this source anymore. Startup costs. So we now format all of these imported tabs so they look nice. Remove grid lines, lock this. I will get into how I want these how I'm going to default this later. Well, we know these are going to be 0. We're putting everything to common. And then this will be okay. All right, that's fine for now. We'll get more into this later. Start month can be this. Let's put this to 2023. Okay. What was I? Oh, the cap. Okay, so I was on there, so I fixed these dates. Cap X. Get rid of this. We'll go column with 15. Oh shoot, we also need to format so values in USD. So all values we want to put to this new format that are so this, all of that. These can say 00. I'm gonna use this right here. All right. I don't think we missed anything. That's good. All of this. Now these bottom ones actually potentially are likely going to need decimals. The rest of these are good like they are. Perfect. Okay. Also, does it make sense for any of the... Oh, we missed one here. So this might need a decimal. This probably will not. Okay. Okay, that's good. So formatting, good, 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 good. Update. Perfect. This is good. Actually, we don't need those decimals. For any of this. All right. Get these. Sometimes it's fun just, it's like cleaning. It's satisfying. Put these over here. Justify everything to the right. Awesome. Now, this, let's just drag all this here. This could be a percentage with a decimal. That's fine. This is a date. Same with this. Alrighty. good. That's good. I want to put this values in USD up above each heading. All right, we already have it here. Perfect. All right, looking good. Looking good. Now, income statement, here's a big one. So let's remove grid lines, freeze, drag this over. We also want to, these are going to be not cost of goods sold, but variable costs. And we might do labels for those. I don't know. We'll figure that out in a minute. Um, so this is good. And then this is year. Properties LLC. Okay, that's fine for now. Oh, these all need to be 15. And then let's take everything besides the dates and get rid of these decimals. We'll keep the profit margins percentage in here, this percentage. Okay, income statement, same deal. Percentage, percentage, percentage. Good. Just check in all these. Okay. Income statement's formatted. Let's do the balance sheet. Then we'll start doing some linking up and fixing everything that's broke. Drag this over. Now, we don't have any percentages here, so I can just go full on the whole thing. And we're almost done with this formatting. So we have this balance sheet. We still want the checks at 00 so we can see decimals potentially. And cash flow statement. Formatting is tedious, but it makes it look really good. And again, we're trying to make timeless spreadsheets that are usable over and over for a long period, and we want to make them good the first time we get them out. All right. We could do these two real quick. There. Now, there's a lot of percentages and stuff in there, so we're going to have to look at this. Okay. Yeah, these are percentages. All right. That looks good. And distributions. Same deal here. Just drag these over. Looks like the spacing is good. We just got to update the numbers. Awesome. Now, we can delete. Yeah, delete this. Let's copy. I believe we can copy this down now for an annual look down to EBITDA. Actually, let's see. Does anything reference cash flow or I mean annual detail? I don't think so. No. Let's do this after we get more of the monthly detail done. All right, so back to the formatting checks here. That's fine. We're not worried about any of this. Okay, so income state. So we have everything formatted now. We need to link up the various financial statements to the monthly detail, and that should flow through here nicely. So for revenue, um, we have, we're going to do two here. We'll do um, property management fees and other fees. So that is going to be, where's our consolidated revenue? Consolidated property management fees, and then below that we want consolidated other revenue. And okay, that's looking good. We drag this over and it's all going to start to come together. We'll make sure this matches our monthly detail as well at the end. Now for variable costs, we have type 1 and type 2. That's fine, we'll just keep it like that. Um, type 1, type 2. Just for the different potential customer types. So there's that and this. Okay, gross profit margin. Now these, so sales and marketing, G&A. Now G&A, we're going to have this plus other fees as a percentage of revenue plus these other fees per active customer. And we're going to have R&D, startup cost. I believe that should be all of that. But we're going to find out here shortly because the EBITDA should match 3,150 and this EBITDA is not the same. What are we missing? Let me look here. So it's 120, 154, 196, 188. Ah, wait. Let me get rid of startup costs real quick and double check again. So 3,280. Okay, good. That is matching actually. And this just doesn't have startup costs on it yet. It will as we move along here. Okay, so that matches. This is fine. This is just based on the debt schedule. This is based on our CapEx, all looking good. We do need to put in data validation for this. I remember Excel, you used to not be able to highlight a bunch of rows and do data validation. You had to do them individually and drag it if you wanted to do that. So that's kind of nice that they've updated that in recent years. Let's make sure I didn't, yeah, this needs a data validation drop down as well. Okay, anything else? Let's make sure we didn't miss. So this, it's good. Revenue assumptions just has the month here, that's fine. Uh, we could put month up here too if you want to see the actual dates. For when you're entering assumptions over time. And I try to do highlighting to make it easier to see each year, like see this is gray, then year 4 is light, year 3 is gray. So it's a bit easier to fill in the data. Okay, so that's good. There's no dates for these, it's just variable. Yes, all of, oh wait, these are good actually. We must have did this. Just want to double check. Yep, that's all good. All right, because we actually built those in the model when we were doing it, so that makes sense. Let's clean this up a little bit. Okay, no dates here. We just did those. Did that one. All right. So that's good. Now where were we? So income statement. We do need to update. So this calc, I don't like to do on an exit value. I don't want the taxes spread out evenly over the last 12 months. I want it to be in the month of the sale, so it's a bit cleaner of a look. So what I have to do is here we don't need 54 or 52. All we really need is EBITDA less interest, less depreciation for taxable. And we'll drag that over all the way. And then, so that's taxable, essentially operating income. Then income tax will manually calculate the amount on the annual for operating times tax rate divided by the active months. That's fine. That's if you have a partial year for your end year. Plus, and now here's the trick. So this is taking the any capital gains times the taxes, but then we're also manually doing it in this column for C30, and that's going to be 54. So we bring the actual tax calc directly into here rather than putting it into taxable income. That way we can get a nice smooth annual tax amount for any years that are taxable based on the total annual income. But we also get the taxes on the sale just to show potential after tax monies. Now, if you don't care about taxes or want to show pre-tax, you can just zero these out, and then it won't show up at all, and it won't matter. All right, so let me make sure this is working. So that takes all of that minus the taxes. Now you can see here this monthly should add up, so it's 3,874. It does not. Let me see. We're out by a lot. So that hit all of that. So we got to add both the revenue streams in down here. These. Okay. Bex looks good. Can make these into a percentage. Now we're talking. Okay. So this total net income is 3.874 now. And we see we have the nice cash flow in the monthly month of exit too, where taxes are not too high in the other months that are not exit months. All right, so this looks good. What I need to do now is, so if let's say you want to end it earlier than the last month of the fifth year, we need to put in stoppers here to stop. Oh wait, this is, hold on. We have stoppers in here for global control for the expenses. However, and I'm sure we have it for the income statement. Yep, this is all already lined up. But for revenues, we do not. So what do we do? Let's see, what's the highest level way to stop? Definitely this one. If our date here is greater than our exit month or end month of the forecast, then zero out. So that's one part. Now that will get us how much? Yeah, we only erase a couple of the expense items there, or the revenue items. Let's keep going. All right, so that's that. Uh, that also zeroed out. Onboarding, because it's taking BL8. Actually, I think we got to put that there too. Just go here, here, here. We try to hit the highest level data point. All right, these are sums. Customer count. That's fine. And customer count actually could be a good one to do because that's going to be in the visuals. So we want that to zero out. Same with the unit count. Okay. Now, did we hit? We didn't hit everything. There's still more, I think, down here. Yep. So let's do that. I believe this needs it too. Let's put it on the revenue stream, this one. Okay, then all of these. And then that should zero out. Okay. So let's try. Might as well do it here too. Okay. So that's fine. This is fine to be drug over. This is fine. Okay. Probably, we might not need to do that one. You'll see, so I'm dragging all these over a bit, and then now I believe I should be able to just highlight this and drag it all the way over without any issues. What happened? Yep, so we do have to do this as well for customers lost. Okay. 0, 0. All right. I believe that's good. Let's do a test. Let's just test. Let's say we want to end the forecast a bit earlier in the year. So we go here. All right, November. So that's all zeroed out. This is fine. We're not going to be referencing that. Application fees. Okay, so application fees we did not. That didn't catch with any of the other stuff, so let's put that in there. Looking good. Okay, now I believe we have this thing all working. Yeah, this looks good. Okay. Now if I go back to the income statement, perfect. End month is working here. Make sure the taxes are working in an 11-month year, so 838, 838, good. Looking good. All right, now we're into the balance sheet. Just double checking. Okay, yep, balance sheet. So, actually, we're going to go right to the cash flow statement. Customer receipts, that we don't have inventory. This can be deleted. Uh, oh, the other thing I wanted to do was indent all this stuff. We'll do that at the end. All right, so cash flow, we have receipts, OpEx, 925. Let's make sure that's everything. No, we need 15 as well. Row 15 for variable costs. Oh, and that needs to be subtracted. All right. Revenue, cost, that's fine. Tax is fine. CapEx looks good. Now, sale of business, we're doing based on trailing 12-month EBITDA. And you can see that terminal value here. You're selling, so trailing 12 EBITDA is 950. Valuation 2.8 million. So a lot of SaaS businesses are actually valued on trailing 12-month revenues or your run rate. So we're going to change this to trailing 12-month revenue. Multiple of trailing 12-month revenue. I believe that'll be more useful there. So then on the terminal value, just change EBITDA to revenue. We now take, instead of row 28, we take row 9. This is going to be a higher number. So 4 million roughly in trailing 12-month revenue, multiple of 3x, so we're valued at 11.9 million. So that's going through fine, looks like. Make sure I didn't have any. Okay, good. I didn't miss anybody. This is fine. So 13,970. It's these three totals. It's really nice that all this logic is already ready to go, because it's pretty hard to QA if it's not. Now, the next part of this, sale of company stock. We have to do some more stuff here. So we have to get this. So we'll go label this other cash flow items. And we will have taxes, CapEx, startup costs, principal, debt repayment, interest, debt repayment, or interest expense, uh, exit proceeds, and then cash flow. And the reason why we have to do it like this is because our source for the minimum equity needed to invest so the business stays above water, is based on the minimum cash position we calculate here. So give this formatting. This will be cumulative cash flow. So taxes we get right from here. CapEx, startup cost. It's already going to be there. Now, principal debt repayment. Do we have that here? Yes. Interest. And exit proceeds. These two. And then we say, take EBITDA plus all of this. Oh, wait. Startup costs we want to be in period 0. Where was I? Oh, yeah. This is period 0 only. And then we also want, forgot, debt proceeds. So if this equals our debt schedule here, then we want this debt to come in. All right. Here's our cumulative cash flow. Now that I know that all this is working, let me expand us back out to the last month of the final 5th year. Okay, this all looks great. What else do we need to do? So now we can do the annual detail now that this is done. Also, let's do equity required. So this is monthly detail 219. So we need 1.7 million to get ourselves off the ground. So now when I go into the cap table, what I'm going to do is just assume 25% of the company is sold for whatever's the remainder of what investors do, and I'll just assume investors are going to do, we're just going to do 1 for 75% when 100,000. And you can obviously change these if you have multiple investors. This is just an overflow that will take their total equity required, less any equity from any of these other slots above it, and any equity from owners, and this is just default, and then the percentage, and these should always add up to 100%. These will be 0. All right, so I think that's a little bit easier to use as a default for people. Okay, so let's convert this to annual detail as well, or add annual detail, and we're just going to keep on swinging through here. We might actually finish this thing today. Total of 5 streams. Okay, so 5 here. We just clear out the rest of this. And we don't need quarters. We don't need this, this, and this is now year. annual. And these are 12 months apart, not 1 month. We'll also give them a little format. All right, so to do this, so getting customers, that's fine. This will just be sum ifs on everything that we see in the monthly detail. The monthly detail really drives the whole model in the assumptions, obviously. Everything else is just referencing that. So we want to sum up anything in 8 if our year number here matches this. Lock, lock, lock. So here's added, lost, ending count. Now this, we actually can adjust this formula now, so we can go beginning plus added less lost 53. Let's make sure that matches here. Yep. Okay. This needs to be adjusted. So ending unit count. So here we have to do an index formula. We just want the ending count of the last month of the year. So give me end of row 12 if edate E4, 11 matches the date here. And we might have to use this again, so let's keep it. Let's lock it so we can just copy paste if we have to. Now this has 1320 units. Make sure, okay, that looks good. Now this, I can now just go copy and paste right into here. And it should be identical because the revenue assumptions are the same. Now if I were to change this goal to say 30 landlords or customers as a goal per year, everything should go up. Yep, so this is higher now. There's our goal getting hit. Okay, good. So that's working. Now rents under management. So here, yep, this is another index formula. And then our actual fee, property management fees for this, we can take from the monthly directly. Okay, this is the same as this. These other revenue items are all just sum ifs. Now I believe this is good. Let's check. Rents this. Okay. 2904. Consolidated. Okay. 116. Looking good. Rents under management here. So this is just adding up those. Variable costs are going to definitely be sum ifs. Now, do we stop adding people in year 4? I'm assuming. Let me see this. Yes. Okay, just making sure. Here's our OpEx to run the company. You can see why positioning is so important to make this fast and accurate when I'm building summaries off of the monthly details. Same exact positions of everything. It's just sum ifs and index references. Now there's a couple tricky items. This one actually, so this is can be sum ifs here, but the period 0 needs to reference the monthly detail directly, just for period 0. What's going on, guys? Had a really good productive day. We're going to keep on going. We might actually finish the template today. All right, so annual details done. Let's make sure this matches our monthly detail cash flow. It does. This is check. Alrighty. Looking really, really good. Now, what I wanted to do, let's do a little formatting. So on all of these financial statements, let's see, we can delete this. We want to indent. So we go accounting and then indent over 1. Make it look nice and neat. Balance sheet, we're really going to be, oh, we don't need inventory. We're really going to be tested on this to see if everything is balancing. It looks good so far. Okay. Monthly balance sheet. Again, basically everything runs off the yellow assumption tabs in the monthly detail, and then everything else you see is basically just references from that. A lot of people don't usually get beyond the monthly and annual detail. They might get to the executive summary, and then this is just kind of bonus stuff with the financial statements. I think it is good to see. But usually people are using these as operating models, so they aren't worried about these, but it's fine. If you do need it, they are here. All right, so that looks nice and cool. Okay, our balance sheet's balancing, which is great. We're going to test that as we change a couple assumptions around. This looks good. Okay. All right, so executive summary. We'll put units under management as like a key metric at the very top, which we have in our annual detail. Here, then we have, for revenue, there's actually a lot of revenues, but we can just put total property management fees and total other fees. And we have those. We can just go right to the income statement. It's these two here. And this will have to match our monthly variable costs, not cost of goods sold. Okay, here's this. Now G&A. There's that. Sales and marketing, R&D. Okay, we're moving, we're moving. There's that. EBITDA, this is a percentage. Make sure this matches. So 4,028,000 should match this. 4,014,000. It's off by 14,000. What could we potentially be missing here? Oh wait, yeah, this is adding the units, so don't add the units. 4,014,000, and this is 4,014,000. Perfect. Okay, so that balances. Let's keep on going down. Debt service coverage. This is going to be a decimal. Average EBITDA per unit under management at the end of the year. I don't know. That's not really. We're going to remove this metric. Okay, so add back cost of goods sold. We don't need that. Reduce purchases. We don't need that. Debt service. We do need, and we have it. And it's these two, principal and interest. Startup costs, always at the beginning, and this is a negative. What's going on, guys? Happy Monday. We're just moving and grooving here, building the spreadsheet out. Exit proceeds. We'll do these two. Huge progress today. Huge progress. We've got all the financial statements in, did all the find and replace stuff. We're just doing all the references now. All the three statement modeling is done and working. It's really turned out to be an awesome template. Here and taxes. Okay, and then check this against our annual cash. We're out by 100,000. Which appears to be loan proceeds, but let's see. So yep. This needs to add in that for period 0. Actually, that should be go across the whole way, and same with the monthly. It's always great to have all these sanity checks, make sure we're not missing anything, especially with all these different tabs. All right, now we're matched up. So the executive summary matches the monthly detail and the annual and all that. I believe, yeah, these are old references from the old workbook. So let's update that. Revenue and EBITDA, pretty standard to view in some charts. And total units under management. This is a good one to have. Units under management is, I think, a main metric these property management companies use for defining like how big they are. So total units under management. And again, I stopped adding just arbitrarily in year 3, but we can add in year 4 and 5, obviously. Add units there. Okay, we are cooking, man. This is great. Distributions. So this, we're going based on the monthly cash flow. That would be in row 218. So 218, if 218 is greater than 0, pull it in. And then it's actually easier to just copy this down, and then this is any negative or less than 0 cash flows. So here's all the cash flows that happen over the whole 60-month time frame. We also have our startup costs. Let's make sure this is referencing correctly. Remaining equity to use should just be your monthly cash on year 0, or the period 0 cash, plus any equity investment, which is the total equity investment of this. Okay, and that makes sense. It's 100,000 difference. Or sorry, not 100,000. It is 30,000 difference, which is just this 30,000. Remaining equity 16. That's good here. Okay, so this cash, this should equal our total cash position 16,953. It does, so that's a good sign of being accurate. So we have our initial costs, usage of equity, and distributions available. Now, here's the project's net present value. Here's the investors and the owners' cash flows, and these look good. So C20, check this against our annual cash. And we have to update this, so investor cash flow is these numbers. Owner cash flow. Okay, and our dates. Perfect. What else? Okay, this looks good. Checked here. Okay, I think we're good on all. Oh, let's make sure these are right. So C16, 19. This should always, so these should always add up to the top. So 18,576 and 1623. Okay, good. That's a good sign. 54,27. Now also on the cap table, these individuals should add up. So 27.2, 254. Okay, so that's looking accurate. All right. Great, great, great. Just trying to think if I forgot anything. We go into sanity checks and this thing will be done. Yeah, I mean, I think we're there. All right, so sanity checks, this is like the self-checking or making sure there's no errors in the logic here. Income statement should always be, that should be checked. 0, 60, and 60 for the balance sheet. Yep. Row 60 and row 60. Now the annual detail monthly, simply taking this number. Now this is a little bit trickier. Let's pull the ending cash minus equity plus the balance sheet cash flow. That should always be 0. Executive summary. Just putting all the error checks in one spot. Okay. So this is good. I want to do a couple things to make sure we have a nice flow. Let's say we don't start till so our revenue. Let's say we don't start adding customers till March. Okay, that's looking good. There, these have dynamic start dates. You could adjust those. Okay, just making sure everything still looks good. Perfect. Okay. Uh, Now, the main sanity checks, let's check, make sure if we hit no, this is working. Let's look at the tax. Looks good. Let's change this to a partial year. Yes, check the tax again on the partial. Okay, that looks definitely right. Check terminal value trailing 12 months 5109, which would be in this case 12 months of revenue 5,109,000. Okay, let's check end of only 4 years. Make sure these are always 0. You wouldn't believe how many the error checking with the terminal value included or not and the end month was very difficult to make sure that these always balanced and the logic flowed correctly. Really, the main integral thing was adding a switch to say if you want to include terminal value or not, and then this tied up all the other calculations that were a problem to figure out. So that all was done back in January when I started doing 3 statement model integrations to all my startup models, and I did that for 6 straight months to upgrade everything. All right, well, it looks good. All the yeses and nos work on the different start dates, so you should be able to plug in any logical numbers into the yellow cells and assumptions, and everything should update without having any errors. I'm happy with this template. Definitely some new logic here. I like the revenue. Um, Defining a yearly goal and the percentage of that goal attained each year, I think is a good way to define how many client or customers you're adding. There is uh, there is a retention schedule. You can see here, and that means you can define the number of months your contract is for. So if you sign up a new landlord on your property management business, you might have their contract length at 12 months or 6 or whatever. And then at the end of that contract, there's going to be some likelihood that they renew. So this model will allow you to account for those things. Also, we did this at the very beginning today. You now have conditional formatting on the colors because you can pick if your primary management fee is going to be based on a percentage of rent, flat monthly fee, or per unit fee. And whichever one it uses, if it picks this, then these are not relevant, or if you pick this one, then these two are not. So there's some conditional formatting on both customer types so that all works nice and neat, a little bit easier to understand. And you also have this other secondary revenue for, onboarding fees, repairs and maintenance, ongoing fees, application fees for both types. Um, also for revenue, you can define the average units per customer for all the customers you sign up in each month over a 60-month period. You've got average rent per customer signed up. Now this 35,000 gets multiplied by the clients added. And let's just put this back to 10, 10 for the first 2 months as well, just so it looks nice. So if I add 3 clients of 35,000, that is set $105,000 a month in rent under management. Now, the unit count is only going to be relevant if you're charging, obviously, per unit. The unit count is also relevant for some of these other costs, like the number of units under management requiring new applicants every month. Also, it's relevant for, well, repairs and maintenance. If we go into the revenue here again, so onboarding fees are going to multiply by the new customers added times whatever it is per customer. Application fees are a complex thing. If we go to our first matrix schedule, 499, where's this? We have a whole big thing of logic looking at the units under management. So here, remember, there's 25 units and we signed up 3 customers in month 1, so there's 75 units under management. So fair application fees, we're doing all that logic against that stuff. All kinds of logic happening here to figure this out. Repairs and maintenance is just based on ending unit count, which is going to be a matrix lookup based on a more complex logic. But yeah, application fees were one of the, it was complicated, but I read a lot of stuff saying that that was a major source of revenue for property management companies. So I did it as an option, and you could choose, your initial onboarding of a landlord, what the application fees are. It'll be higher if, and you can see in the revenue assumptions, you could define the initial onboard of applications, what the fee is, how many newly onboarded units require, and the number of applicants per unit. And then also your ongoing applications, and that's just assuming you have turnover and those new tenants are going to have application fees. And there's variable costs for all those items too for both the customer types. So I'm really happy with how this turned out. It's a really good forecasting tool for any property management company, startup or otherwise, to really get a handle of all the different items that drive revenues and costs and how you can scale and everything else. Yeah, the model's done. I'm really happy to finish it. It took 5 streams. Everything's been sanity checked. Let me do one final check to make sure there's no reference to a .xls in here. Nope. Okay, that's good. Oh, wait. Actually, we never did visuals. So, and that's a big part of this. So I'm gonna have to do that tomorrow, and then we'll get into some other stuff I want to model this week. Remember, I was gonna do a catch-up waterfall for GPs, and then I'm gonna do a construction business or construction job quote versus actual tracker and dashboard for essentially any construction business that has, or any business where you have jobs that you have quotes and actual costs, quotes for or for price and actual price, and it'll be a cool tracker. I'm going to do that, and then also for the car wash model, I'm going to add a uh, memberships instead of just one time. So there'll be some fun stuff there. All right, well that's about it for today. If you want to check out more, go to smarthelping.com. You can buy all the templates I've ever built for $9.99. Tons of value here. I've got hundreds of different unique financial models, templates, and tools. If you've never used Excel or Google Sheets, you're going to learn a lot. If you do use them, you're going to see a lot of cool logic and save, I don't know how many hours by seeing how things are done properly. Lots of value here, so check it out. Like the video, subscribe. I'll be back tomorrow at 10 a.m.